Good morning and welcome to our sustainability series webinar on Field to Market Canada. My name is Dean Dick with the Ag Info Center, and I'll just be sitting in the background watching them, making sure everything runs okay. Just a couple of housekeeping items. First, this webinar is being recorded and you'll receive a link to the recording after in your email tomorrow if you want to watch it again. Secondly, if you want to ask a question of our presenter, please use the question box on the GoToWebinar control panel. Type that in, and then our people will take the questions and read them out at the end of the presentation. So with that, I'm going to turn it over to Carrie Ann for introductions. Carrie Ann.
Great, thanks, Dean. Morning, everyone. My name is Carrie Ann Kohler-Monroe, and I'm with the Environmental Stewardship Branch. We host this webinar series to promote sustainability that's happening with industry today. Today, we have a presenter, Markus Weber. Markus is with Sericon, an Alberta consultant company that has acted as the secretariat for the Canadian Field Print Initiative since 2010, and which has now officially aligned with Field to Market, which is the largest field to crop sustainability platform in the United States. In addition to the governance and administration roles, Markus was responsible for turning scientific algorithms such as those used in AAFCs into a grower-focused tool in the Canadian Field Print Calculator. Markus holds 3 degrees from the University of Alberta, Bachelor of Science in Agriculture, Master's in Business Administration, and Bachelor of Laws. He has been a professional agrologist under the Alberta Institute of Agrologists since 2012. He continues to work with Sericon and LandView drones with focus on quantifying Canadian agriculture. Thank you, and I will turn it over to Markus.
Thank you, Carrie Ann. I'm going to risk turning on the webcam. I don't know if I'm visible or not, but
it's perfect.
Okay, great. I'll turn it on because I don't like having a one-way conversation, and being on the receiving end of webinars, I find it's a lot easier if I can see who's speaking. But I can't see you, so my apologies if I'm not looking at you the whole time. What we're going to focus on today is where we are in terms of the Canadian Field Print Initiative. Those of you that already know us, I'm sure there's a few of you that have attended some of our meetings over the years, or that knew of us from the Roundtable for Sustainable Crops and other venues. So I will update some of you on what's new in terms of the indicators, but we are going to start at the start. The reason for the entity existing in the first place and where we're headed with it. So generally, the reason for any sustainability initiative, frankly, is that we are facing some of these realities. Climate is changing, there's more middle class, people are purchasing more protein-rich foods, there's extreme weather patterns that are changing, and we've got the continuing pressure of population increasing with a limited supply of food, fiber, and fuel, and we need to figure out how to grow more. That's the basic reality. Happening at the same time are things like consumers wanting to have more sustainable options as part of their food basket. They also want companies to better explain product impacts, and frankly, millennials are willing to pay for these things. They're willing to pay more for sustainability. So what that led to is a lot of sustainability promises. If you go to the websites of most of the multinationals, any processor, a lot of retailers as well. So you see Walmart on this list as an example, where they make promises that fertilizer is going to be optimized on 14 million acres of US farmland by 2020. And 2020 was a convenient year. A lot of people made a lot of promises for 2020, and we're now a month away. So a lot of these promises obviously weren't made this year. They were made 5-10 years ago. At the time, it seemed like a long-term project, but those timelines are now up for most, and sustainability reporting has been happening. And frankly, I'm surprised how many of them are meeting many of those targets. many of the food companies, the targets were often set for some of their top products, their largest volume products, frankly. So General Mills has made greenhouse gas emissions a significant promise by 2025, and that's related to oats because it is one of their primary products that they're sourcing, and that's also the primary product that they're sourcing from Canada, and that's why we've been quite involved with General Mills over the years. So with those sustainability promises, some of the grower organizations here in Canada, the initial reactions, I remember going to farmers meetings back in 2011, 2012, and the word sustainability was the S word. I mean, there was no hiding. When we went to present on sustainability, we had to present this case of the consumer demanding more information and these promises having been made. I remember I used to always put those promises front and center, and there wouldn't be boos in the crowd, but frankly, the reaction from the producer side is often things like, we are already stewards of the land. And what's important to me is financial sustainability. And of course, environmental sustainability goes with financial sustainability. We can't continue to grow crops if we're not looking after that land. And things like consumers don't know what they want, that there's only some consumers demanding this information, and the middlemen, the food companies, shouldn't necessarily be bowing to those. So you get some of these strong reactions. And this is one of the loudest ones that we heard, and we heard it for a long time. We already are sustainable and improving. Why do we need to prove that? And so what happened was a bunch of organizations got together, and here's a list of logos of some of the organizations that have been participating in the Canadian Field Print Initiative over the years. The ones on the left-hand side, Pulse Canada, Grain Farmers of Ontario, Manitoba Pulse, CropLife, Fertilizer Canada, and Canadian Canola Growers Association. Those were the funding partners. So they put in cash contributions. Those were more than matched by Agriculture and Agri-Food Canada, who supported the project over a number of years. That money has now sunset over a year, but it helped to build the calculator, all the different algorithms, and the reports that we produced. The other organizations that you see on this chart contributed their time, contributed direction, or frankly were users of the system as well. So companies like Patterson Grain, who was very involved with General Mills and the oats projects over the years. So all these organizations got together and said, well, how do we make these two realities meet? Producers on the one hand being somewhat resistant, but you can see the grower organizations on here. You have prairie oak growers involved, and the pulse growers and canola growers, because they realize that there needs to be a source of sustainability information. So the first thing we did was do some macro scale reporting. And I'm always not sure whether this is national scale or regional. It's a national report that we produce. We've produced two of these now, one in 2011, one in 2015. But it breaks down the sustainability outcomes by region. So Western Canada in relation to Ontario. We haven't done Atlantic provinces or BC, but we've been modeling the primary crop growing areas, the largest volume of or acreage of crop. And what's in these reports by and large is a big pat on the back. So it actually makes these two things come together. The consumer demand for more information, because it is intensive quantification of different parameters, things like land use efficiency, soil erosion risk, climate impact, and greenhouse gas emissions. All those things are quantified. But because of the way that Western Canadian agriculture in particular has developed over the past decades, it was a big pat on the back. I remember in the 2011 report, we hadn't yet modeled Ontario soil sequestration and things like that at the time. So it was literally on every indicator in every census period, there was improvement. It was a way of showing continuous improvement over 4 census periods. And on every indicator, the industry was doing better. The big drivers behind that were things like reduced tillage, genetics, improved genetics and hybridization of crops like canola, and simply better fertilizer placement and better nitrogen utilization were a big part of that as well. So those things really drove continuous improvement over those decades. And those reports were a part of the work that we were commissioned by the consortium partners to produce. What's happened then over the years that followed is that we built a calculator and we did a whole bunch of things that really mirrored very closely what field to market in the United States was doing. For those of you familiar with field to market, you may know that we were quite unabashedly at the time in 2010, 2011, 2012, copying what they were doing or attempting to replicate what they were doing in the United States in Canada. There's a huge difference in terms of the data that's available, the algorithms that are available for modeling sustainability outcomes, but I think we came fairly close. So what happened this past year is, now that we had built all of these tools, is we had to decide where we were going to go with it. What do we do with it? We didn't want to shelve it because there is active use of the tool. We expect there will be more demand for it as well, and we know there is actually. This year we've got more projects launching. So what we decided to do was to align very closely and formally with field to market. So we've now incorporated as a Canadian not-for-profit. Over the past 9 years, we'd always just worked as a loose consortium. Pulse Canada was the primary receiver of funds and distributor of funds, but there was no Canadian Field Print Inc. There was simply a Canadian Field Print Initiative. So we've now formally incorporated, and we've signed a licensing agreement with Field to Market. So we're now able to use the Field to Market brand. In fact, you'll notice the orange color at the top of the newest slides in this slide deck. That's Field to Market's branding. We'll be using their branding, their names, and frankly, a fair number of their processes as well. So processes around metrics approval, where we had metrics committees here, had great support from academics, from some of the agronomic companies. We had a lot of input on how our metrics were developed, but we didn't have the formalization of the process that they have in the United States. So we'll be adopting a lot of those as well. And then we're collaborating with Field to Market. Over the past 3 years, we have sat on their metrics committee, they have sat on our metrics committee, and frankly, it's more about the non-meeting time. We talk to their staff continuously to make sure that the two initiatives are closely aligned. It's not just us copying them anymore, it is a formal recognition that we're working together. So we're hoping to bring a lot of the old partners back on, and a lot of these are already actively engaged again in the new initiative. But we also hope to get some other membership. And what you see now is the logos of the Field to Market membership. Hasn't been updated. I think they're at a growth rate of about 18 to 20 members annually right now. So when you look at this list of logos, you see a lot more food companies there, a lot more consumer demand. And it's companies like Kellogg's that we'd like to have on board with us. At this point, General Mills is the only true demand side. We've had a lot of producer organization involvement even though producers individually sometimes may have a negative reaction. As a group, the producers here in Canada have really come together to build a sustainability initiative. So what we've done is we've essentially aligned all of our pieces. What we had to bring to the table was this set of indicators that we've developed. Most of it is Agriculture and Agri-Food Canada, HOLOS algorithms, but there's also others around soil erosion risk. David Love in Manitoba has contributed some of that work. The fertilizer use survey that's been conducted, those of you that haven't heard of that survey, I'd love to provide you more information. I won't get into it in this talk, but there is some really deep fertilizer use information, and it is now going to be continued by CropLife Canada, I believe, and Fertilizer Canada. And then most importantly, we've developed this field print calculator that we want to leverage and bring that to the demand side, to the food companies that want to use it. So the reason that we're aligned with Field to Market is that we really have a unique way of looking at sustainability for most of the other initiatives. When you look at the plethora of initiatives that are out there, whether it's the EFPs here in Canada or global initiatives like SIZE, Farm Sustainability Assessment, those types of initiatives are by and large focused on practices. They develop a list of practices that are felt to be beneficial for environmental outcomes, and then farmers either self-assess or are assessed and audited against those practices. Field to Market and now Field to Market Canada are different in that we measure or model the outcomes. So rather than saying, we'd like you to adopt these practices or these practices or these practices because they've been shown to be beneficial, we model the outcomes of their current management. This assumes that you're capturing all of the information to model accurately. So modeling always comes with its grain of salt. But for things like greenhouse gas emissions and energy impact, the science is strong. The data sets that we have in Canada are also very strong on soils, on climate, that we are able to model that quite effectively at field scale. So we believe that brings something unique. This isn't a competition. I think for those that are looking to have sustainability of their production modeled, it makes sense to use a combination of practice-based and outcomes-based tools. But the outcomes basis is what makes us very unique in terms of the sustainability world. So what we've done is we announced at their annual general meeting in Indianapolis that we are now Field to Market Canada. Our vision and our mission for Canada are identical word for word to what they have in the United States. We frankly didn't need to amend much because in 2010 we were replicating what they were doing. So things like transparency, being grounded in science, and always being outcomes focused, all of those were part of our principles anyway. It may not have been the exact same words, but work really is continuing the same way it has for the past 4 or 5 years. So what we model is these 5 indicators: land use efficiency, soil erosion risk, energy use, climate impact, and soil organic carbon change. We've kind of integrated the soil organic carbon change on the advice of our metrics committee into the climate impact. So we net soil carbon sequestration against the emissions to have just one climate impact number in terms of the overall display. The yellow boxes that you see below are Field to Market's algorithms. So very similar to ours. We will probably be renaming ours greenhouse gas emissions as well, because that's what it is, and that's a little easier to understand. There's several other indicators we've been working on, biodiversity and water quality. And this came out of consultations with demand side, with food companies, to ask what else is important to you in terms of sustainability modeling. We have finished modeling those at the national scale. So bringing those to field scale will be challenging. We have no doubt. So we haven't really embarked on that portion of it yet, but we do have a national indicators report for biodiversity and water quality as well. Again, thanks to AAFC scientists for most of that work that we've integrated into ours. So the national sustainability reporting was really step 1, and most of that happened in 2010 to 2011 is when we published the first report, and then we went to build this calculator. The reason for the calculator is that when the group looked at the indicator reports themselves, they were a great pat on the back, but people immediately started asking, where's the end of this good report? Because you can only have reduced tillage on something close to 90 or 100% of the acreage, and we're already there for many of the practices that really drove the improvement, that continuous improvement over the decades. We're nearing the finite end of improvement on those factors. So there's new things coming, and we needed to build a calculator that could model outcomes so that at the field scale, an individual producer could look at their practices, their management regime, and compare internally amongst different management practices, if they are managing differently, or if they have one uniform set of management, they can compare against neighbors, against a peer group in their region, or against a provincial average. So we've built this calculator where producers are providing only a minimal amount of information. I mean, we're always balancing how much information we ask for against participation rate. It's at this point, it only takes about an hour for the first year for a producer to be onboarded and provide all of the information that's required to produce their first calculator reports. And then in follow-up years, it's 15 or 20 minutes. So there isn't a huge demand for information, but what they get out is they get one of these blue reports for every field that they contribute. So the report summarizes the data they've provided, of course, but then it goes into details on the individual indicators and what the components of those are. So I'll show you some of the examples of what we're outputting. We've also started adding a farm scale report where we summarize, if you look at the bottom graphic here, for example, we summarize the land use efficiency across that farm. So the indicators 100 across all of our reports is the provincial average. So this particular farm submitted 9 fields, and across those 9 fields, they had a score of 56 to 114 on land use efficiency. So some of their yields were above provincial average and some were below, is essentially what that indicates. For energy use, climate impact, and soil erosion, of course, that provides a little bit more insight when they flip through the individual fields and can now compare those to the overall farm overview. Here's the data that farmers are required to input to get their report. At the farm level, they're basically just providing an identifier and they're providing their machinery set. And this is important for a lot of the energy use calculations, the horsepower of tractors. In some cases, we have things like the header width on a swather and can estimate what the fuel burn would be based on that. But of course, the better the data, the better the outcome. So they are able to input liters per hectare of burn or liters per hour of burn, input it in different ways, depending on the level of information they have about their own farm. And then at the field level, we use primarily location. Legal land location is what we use in Western Canada, and then lot and block in Ontario. And we use that to pull information from soils and climate databases. And also the tillage regime is something that they input. And then at each individual crop level, they provide us with how many passes there are of different applications, fertilizer application, how many passes with the sprayer, that type of thing. And most importantly, yield, because many of these indicators are per kilogram of crop as opposed to per hectare. So I'll go through some of these rather quickly. These are some of the charts that we're outputting. This one provides context in terms of where their yields are in relation to the provincial average. So in this particular farmer would have provided data only for 2015 and 2017. And in both years, their yield was significantly above the provincial average for that crop. This is the key graphic that really summarizes the results for a field. So for the 4 field print indicators, it provides an indication of where they are in relation to the provincial average for those. So this particular farmer is doing better than average on everything from soil erosion to energy use and climate impact. Then we take those individual indicators and we break down what the components of them are. So this is the energy use indicator for this particular farmer. 64% of their energy use is for the manufacture of fertilizer. This isn't a true LCA. We've built some boundaries around this. We have included fertilizer and machinery manufacture, but on the downstream side, we quit at field edge. We don't include the transportation to the farm site. We don't include transportation from the farm to the processor. I mean, all the downstream side is not included. It's the things that were felt to be under the control of the farmer and therefore were brought into this modeling. Climate impact, again, they see the different components. Nitrogen fertilizer, in addition to being part of the non-field work, GHG emissions is also part of the nitrous oxide emissions, which are modeled in our calculator as well, again, based on HOLOS algorithms. Soil erosion risk is the only one where we present something other than the provincial benchmark or the regional benchmark. Here we have the individual eco-districts that we're modeling as well, and comparing that field against the eco-district based on management and crop rotation. I see I'm gonna run out of time, so I'm skipping past a couple of slides there. So that calculator itself is something that provides insight to the farmer themselves, and if it's part of a pilot project, to their trusted advisor. We have some companies that have agronomists assigned to sit with the farmer and collect the data, and then they meet with the farmer again after these reports are produced. I'm sure there's other things that happen during that meeting. They're not just driving out to the farm to talk about the sustainability output report, but it is part of the conversation. And we found that that was all well and good, but one of the biggest problems was the indicator was the provincial average, which for most provinces is pretty meaningless. If you're from southern Alberta, Lethbridge, the provincial average for wheat may be somewhat meaningless if you're using irrigated if you're on irrigated land. If you're from south of there down in McGrath somewhere, well, the provincial average for wheat really doesn't have much of a relationship to your yield in your location either. So we've created these workshops where we bring people together, largely driven by the demand side. So we've had several workshops in Saskatchewan and Manitoba for General Mills, where General Mills and their partners, so companies like Patterson Grain, AgriTrend, Cargill, have been involved as the trusted advisors to the farmer. And in Ontario, we've done some soybean and some wheat projects there as well. What we do at those is we present them with the reports and then kind of show some of the outputs. So these are the crops that are currently in the calculator. For Western Canada, it is all of the major crops. Corn and soy are ones where we need to do some modeling given how recent all of the production on those has blossomed. We've got some catching up to do to bring those into the calculator. Sunflowers is another crop that we've had a lot of demand for, and we'll probably start modeling that quickly. So at the workshops, what happens is rather than the producer sitting individually at their desktop, looking at this report and saying, well, what does that high soil erosion risk mean? I don't know what to compare it to because the provincial average is some relatively undulating land in the center of the province, perhaps. Instead of that, what they do is they sit down with a group of their peers. And we don't present just their results back, we present back histograms of the results from the group. So when you get a result like this oats energy use, and that's a real chart, this is from Manitoba back in 2016, there was one producer that he was one of the larger producers, so he shows up as, I think, 4 fields that had much higher energy use than all the rest. And the second we showed that screen, his hand pops up and he identifies himself and he says, hey, that's me, that's me. And the reasoning was he just had a really low yield because some of it was like half the field he wasn't able to harvest it because it was too wet in the fall. Easy explanation for that and really didn't provide any insights. But there are instances where we are getting that kind of insight. So again, this is that slide where one of the producers had much higher energy use than the others. Fertilizer slide went up and everybody kind of rolled their eyes and said, yes, great chart, nice even distribution right around 60, 70 pounds. Yes, yes, that's what we do. But then you get one of these and people started saying, well, who's the guy with all the phosphorus and why are you putting down so much? Led to a bit of a conversation. The one that led to the most conversation was this one. There was one producer that was applying 25 pounds of sulfur to their oats acres. And what happened was almost the entire lunch hour at that meeting, we broke from the meeting and the lunch hour was consumed with people talking to him about his trials that he'd been doing on fertility. And it was producer to producer learning. There were agronomists in the room learning with them, and it actually turned into some trials that happened the following year. So very interesting to see this new lens of sustainability being used to look at what is essentially an economic assessment more than it is an environmental. A few other interesting outcomes that came from some of these reports. So we aggregate all of the results together. And for this 1 year, we looked at just some of the overall management regimes and how they fared in terms of the modeled outcomes. These aren't all that surprising, some of them. Things like zero till and minimum till and the relative adoption levels of each. And then when we looked at some of the other outcomes though, when you look at the soil erosion risk, that's to be expected that the zero till would have much lower soil erosion risk because that is one of the factors. I mean, which regime you're in is used to model by HOLOS how much erosion risk you're going to have. But energy use and climate impact and even land use efficiency. So on average, what that land use efficiency indicator of 72 means is the zero till farmers on average do have a higher yield than the minimum till farmers. So they're producing more crop per unit of land. This is another one that was kind of interesting. We asked, one of the questions was the rotation. So, or we could look at it if they didn't answer the question, were you growing the usual cereal, canola, cereal, canola, cereal, canola? In some of the areas where we do this modeling, that is the typical rotation, but others are growing 3- and 4-year rotations. Those with 4-year rotations or longer had significantly lower energy use, significantly lower climate impact, and this is all per kilogram of crop. So very interesting outcomes. That led to more conversations between the trusted advisor and the farmers in that area. So where we are right now in terms of participation, most of our projects over the last 2 years have been with General Mills. Before that, we did have some in Eastern Canada as well and with other partners. But what they had this year, this is a typical, this 2018 crop, we had 183 growers, 430 fields, 180,000 acres, of which 120,000 are ongoing oat acres where the producers are providing us the data annually. So we're getting a nice time series. The outputs from that at the aggregate level are that generally speaking, there is a slow improvement on most of the indicators, although there's ups and downs, and the ups and downs are largely because weather makes yield go up and down. And that's still one of the things we always struggle with, is presenting everything on a per kilogram basis as opposed to per acre. But we still feel this is more relevant if you're looking at it from the demand side in terms of sustainability of food production. So where we are right now is that we've built some ability to input this data in new ways. The data collection for this past year, there were really 3 options. We could mail out an Excel workbook and the farmer could fill it out themselves. We do have several farmers that insist on doing that every year, and they're also the ones that don't give us the 3 fields times 3 years that we typically ask for. One of them provides us with 32 fields, every one of his fields every year. So we have some farmers participating that way. Then we have the largest number right now are coming in through trusted advisors that are completing the Excel workbook, and then we pull that into our system. And we've also had some where the trusted advisors have been set up on our portal to enter the data directly. And that was the ask for this year. So we're now, to a limited number of farmers, rolling out our platform so that the farmers can go directly into this portal, enter the data, and the trusted advisor can monitor that this progress is happening. And there's a company that is requiring producers, if they want to sell their oats to them, to enter data into it. So I just thought I'd give you a quick peek at what that portal looks like. Because this hasn't been rolled out to the public yet, it is being used by the One Grain Company for their growers to enter the data. So this is what a farmer would look at when they receive a link in their email. They click on it and there's a login procedure. They've got a getting started section where they're asked to create a farm, create a field, and enter annual field data. And data entry is what you would expect. It's a form-based data entry where you can free enter data in some, have drop-down boxes in others, and answer some basic questions. And you step through all of the sections, and eventually you have a field, a farm, and then the individual field reports. And perhaps I'll go there just so you can see what the most complex part of the data entry would look like. So we've created it as a single sheet. By minimizing significant portions of it, it makes it look less demanding than it perhaps is, because this in the first year would probably take them about 15 minutes per field to complete. But it is, again, it's drop downs and simple data entry. And then you can just go through and enter the different portions, entering the crop, or if you do have cultivation passes, if it's not zero till, you can add a new cultivation pass, and same thing with fertilizer. So it is fairly simple to do, but it takes some time to get through, especially in the first year. So we haven't had many growers. We've got 8 or 10 right this week that are using the platform, but we expect in the next month or so we will be able to make that public. We're just beta testing it to make sure we haven't got any remaining glitches. So that's the primary way that I suspect many will be bringing the data in. We do have other ways as well. That platform is actually built as a second piece of software onto our API. So it's possible now for any other software company that wanted to build another piece of software to push the data in and receive those PDF reports back. That's all built and it's currently working. We have had one grain company that's doing that as well. It's the same one that has now decided to use our portal because their software was built for a specific purpose and it was essentially one user. But building that was a matter of 12 hours, I think they said, of software time to be able to do that. So we've built all of this infrastructure, a SQL database backbone, and it's all hosted in Microsoft Azure in Canada to keep it secure. All of that infrastructure is built and ready for us to start receiving data that way. So where we are right now overall is we've built all of these pieces, the national indicator reports. I suspect we'll find a way to do that again once the next census data is fully available. But what we've been focusing on this year is things like that field to market alignment. We'll have our first annual general meeting in February of 2020. Now that we've created this not-for-profit, we need membership, we need board members, and we're in the process of recruiting all of those. At the moment, it is a shell, but we're able to receive funds and distribute funds as we need to so that we can bring the memberships in. We've worked on the biodiversity and water quality indicator that was completed early this year. Actually, that was back in March. I think we produced that report. We've also completed a farm sustainability assessment benchmarking process, a combination of a farmer that uses our calculator with the legislation. Doesn't quite get them a bronze or silver at this point with FSA. So we're building an add-on module where there would be several practice-based questions that would enable it to be used, enable the combination of the calculator plus those add-on questions plus the legislation to be used by sustainability regimes that are relying on size platform. And then we've completed the API. We still need to create some new reporting format with the new branding and all that type of stuff. But other than that, it is business as usual. Project data collection for 2019 has begun now that harvest is over, finally. And that's kind of where we're at right now. So what we've got coming up in the near future is we're currently recruiting members. Like I said earlier, we are getting some interest from field to market members so that essentially they're opting into a North American sustainability initiative. Even if they aren't sourcing in Canada, they're interested in supporting it because it is for the industry as a whole. And then we've got our AGM coming up in February. And in the meantime, we're launching some new projects. We have one in particular that's very interesting, a company that sources wheat out of both North Dakota and Manitoba. And we'll be launching one project filed through the US system where we'll be using both sets of algorithms to model wheat cross-border. We've already done that as a hypothetical, but we'll be doing that with real farmers this year. So that'll be a really interesting project. So with that, I haven't been following the chat, but we have plenty of time left for questions. Carrie Ann?
Yeah, perfect. Wow. I guess, yeah, there's lots of momentum created with Field to Market Canada. And I guess congratulations on the incorporation with Field to Market US. There's a couple of questions rather that have come in. I just want to remind everybody that if you do have a question, feel free to submit it to the chat box and we'll start the questions. I know you had mentioned that it takes about 15 minutes per field to enter it for the first year. I guess how is that data saved every year for the farmer to access, and why just the first year? And can you kind of describe, I guess, the input and the field requirement data again?
Yeah, so that was actually one of the downfalls of the old Excel-based system. When we had tens of growers, I would manually take last year's Excel workbook for those that submitted it and add some new tabs so that they wouldn't have to re-input some of the data. In reality, that sheet didn't make it back to the grower and they would start fresh every year. So those same growers are still part of the program, and now their data is going to be on this new portal. So once they've entered their farm data, their machinery set, their legal land locations, their tillage regimes, and soils information. All of those will be saved on the platform, and they can just choose that field. And as long as there's been no change to the tillage regime, there's nothing necessary for them to re-enter that data. They can just go right to how many passes of pesticide and what's my yield look like for the year. So that's really the time savings, is they will now have a login for their farm where they're not re-entering data annually.
Okay, that's perfect. A follow-up question: what's the cost for farmers to use the calculator?
There is no cost for the farmers at all. With this new portal, once we've tested it a little bit, we will make it available online as well. So if a farmer wanted to enter their data and see how they stack up against the provincial average, that's not going to be at a cost to the farmer at all. When a company wants to make claims and is sponsoring workshops in a region to be able to bring farmers together and have us present to them, there's a cost there. So the main cost being they need to be a member. I didn't get into membership structure here, but the decision that we've made, and which I assume will be confirmed at the AGM, is that it'll be $5,000 per member, regardless of the type of member. So the producer organizations, all the logos you saw there, that they would be contributing $5,000 a year to be a member. And then the companies launching projects, they pay $3,000 per workshop and $100 per grower. So there is a cost to a grower that participates in a project. We don't expect that would be handed off to the grower themselves to pay, though. That's part of the proponent food company and the brokers, the Agri-Trends or the Patterson Grains in the middle, to shoulder that cost.
Okay. And I guess you did mention that there was one company requiring the input of the data, right, for purchasing that grain?
Yeah, and that's really, there have been some other carrots too. Getting people to participate in anything where they're entering data, whether sustainability or not, usually requires a carrot or a stick. Some of the carrots have been fairly simple. One of the unique initiatives that General Mills undertook in their third year of doing these pilots, what they did is they took a busload of farmers down to Minneapolis and took them for a tour of their mills, had their food scientists talk to them about the quality characteristics of the oats and what's important to them. So it was a learning initiative, but at the same time, that was a bit of a carrot too. They got a free trip. They got to go to a ball game. I mean, there's a bit of that. We're not privy to what commercial draw there might be. It's certainly open to a company to offer to only purchase if, or to pay a bit of a premium for those who participate in the sustainability initiative.
That's right. Okay. Switching topics a little bit, soil organic carbon by farm sorry, let me start again. So there's a lot of variability in soil organic carbon by farm. Can you unpack the quantification and the use of this value or values that are being used?
So the change in soil organic carbon is being modeled based on several factors. The main ones being whether you have broken any permanent grassland and the emissions that come from that, then the reduction in fallowing to continuous production sequesters carbon, and then the reduced tillage going from conventional to reduced to minimum to zero till will also sequester carbon depending on the crops you're growing and other factors, climate factors as well. So that's the type of modeling that we're doing for the change in soil organic carbon. We're not measuring soil organic carbon. It's modeling at a fairly macro scale that we've adopted to the field level. We actually encountered considerable issues with that in Ontario because it's not as straightforward there. Reduced tillage doesn't necessarily result in soil organic carbon sequestration, and rather may just be a stratification, a change in the stratification of it in the soil profile. So all of the modeling is of that type, right? We're not taking the individual results or the measurements. One of the companies, General Mills, again, it has gone to the next level now. They're looking at more practice-based elements. They're looking at cover crops and their impact on soil parameters, and they are measuring some soil carbon as well, rather than just the modeling.
Okay. I was just wondering, there was a slide with the US members listed. I guess how widely is the calculator being used by farmers in the US, and specifically why?
Their calculator is available to any member of the public as well, and that data doesn't make it into any regional benchmarks. Adoption rate of that is fairly low as well, though. Similar to what we've noticed here, farmers do participate in the regional workshop initiatives, and frankly, the retention rate is high on that. Farmers keep participating once they're in. But the participation is in connection to a company that wants to document the sustainability of production of their commodity. So that's really what's driving most of the use of the calculator in the States as well. They are using the calculator for those workshops. I don't know the total adoption rates, but their calculator is available online, so it is used more than ours is, obviously, because ours is currently still an Excel workbook.
All right. Will the sustainability indicators be generated at higher resolution, say by Eco District or SLC in the future? As you said, it would probably be more applicable than using provincial averages.
So what we do at the regional workshops, where there have been 2 or 3 years of data already, is that I actually do present it as 100 being the regional benchmark. So it's essentially a peer group of those people in this room, the 20 or 30 growers. Here's what your average number looks like and the distribution around it. So we're at the point now where we have enough data to be able to do that, but that is for 2 areas. That's kind of the Red River Valley south of Winnipeg, and then up in Melfort, kind of northeast Saskatchewan, where we have growers coming to these regional workshops. So I don't foresee a time when we would open up the online calculator and use the data for its own to create those benchmarks, because an online calculator, when there is no one involved, no trusted advisor, there's no quality assurance there. So I wouldn't want to use that data to create that type of an indicator for a random region, but for one where there is involvement of food companies and, most importantly, the trusted advisors, the agronomists, we are able to do that now.
Okay, no, that makes sense. I'm not seeing any more questions. I'll just leave it for another few, maybe another minute. You'd said the next step is your AGM in, did you say February? Is that an open AGM? And is there, yeah, I guess, how are you pursuing the expanding of your membership?
So I expect this first AGM will be open to members. So we're currently recruiting members, the producer organizations that have been involved. We've got more interest now from food companies that will be at the AGM as well. So that AGM will be for those that have signed up as members at the time. I suspect in the future we will have a structure similar to what Field to Market has in the US, where we have meetings that have certain elements where voting members only would have a role, but other elements as well where we could receive active involvement from associates. That's what they call the sector down in the States. That's the academics and the government organizations that wouldn't frankly want to be voting on something like this. But at this point, we have one class of members to get the organization rolling, and then we'll select the board from that can make the decisions about that structure going forward.
Okay, and sorry, where will the AGM be held again?
Most likely Winnipeg. We haven't set the date yet. It'll be in February. We're going to choose it next week amongst those that have already signed up as members. Winnipeg is just a great place for anything in field crops because it lets people from Ontario and Alberta meet without too much travel cost.
Okay. We just had a couple more questions here. Comparatively, how does Alberta compare to the other prairie provinces regarding uptake?
General Mills has been the driver for the largest volume. So those 180,000 acres that you saw up, those were General Mills's. In total, other initiatives would probably be about 20 or 30,000 acres. And that's simply because of who's driving it. In the first 2 years of the calculator, almost all the data was Alberta data because it was people that we knew in the industry that were contributing their data and being the first beta testers. But demand dictates where the data comes from. So we don't collect data for the sake of collecting it everywhere. We just collect it where we have interest and willing partners. So almost all the data right now is Saskatchewan and Manitoba.
Okay. Okay, well, I think we're coming to an end. I appreciate you working with the webcam, Markus. It is definitely nice seeing somebody's face when they are presenting. Very much more of a personable type of presentation. So with that said, I would like to mention to everybody that there is 2 other webinars coming up in January, the Alberta Chicken Producers, January 23rd, and then we're also going to have the Canadian Centre for Food Integrity presenting the research of public trust research for their 2019. So hopefully you can join those 2 webinars in January. And I would like to thank you, Markus, for your great presentation. And again, it will be available for listening after this as well.
Thank you very much.
Have a great day, everyone. Thank you.